This is Eric Mwathe for the trading week beginning February 18th, 2014. Let's take a look at how the markets closed on Friday. We see that the Dow was up the most, up 0.79%. Nasdaq was almost unchanged. S&P 500 was up about 0.5%. Gold was up 1.42%. And if we take a look at some other areas of the market, we see that especially on the commodity front, silver had a nice trading session on Friday, up 5%. So let's take a look at how the market did trade for the week. The Nasdaq was up 2.86%. S&P 500, the Dow was up 2.2%. S&P 500 was up 2.32%. Now, these are amazing moves for a market that was just about to break down about 2 weeks ago. Here, this was a breakdown mode, especially intraday, and somehow we are back at new highs here. It's quite an amazing turnaround, and you can see that the technical picture right here, trading above 69.10, is what you want to see. The last time we had a move above 69.10 was here, which was this breakout here. So in as much as most of us, including myself, we were actually getting very bearish here, the market has completely turned around and now starting to behave like it did in 2013. So, we have to respect the possibility that a move like this could very easily generate enough momentum and energy to move the market, especially on this chart, to higher highs. So it's amazing that ever since on the weekly we found this support, which was, I drew it somewhere around there, which connected the lows on the weekly RSI. You see that this held. You can also draw it like that. So this, once we bounced off here, it's amazing that we did not even show any signs of pulling back. This has been straight almost from the very day we hit these levels here. We've been turning around and now surprisingly closing at new highs, and I believe that is also positive for the year. So what that means is that now we have to start thinking, wait a minute, what if we are wrong on the downside and this market actually has the momentum and the capability of moving higher? Let's take a look at the Nasdaq Daily. That was the weekly. Now on the daily, you start seeing some slight issues here. We are making a higher high by about 1 point. So we are making a higher high. This is the highest daily close in almost 13 years plus. And you see that the technicals is way low. And the fact that the technical picture is coming at around or close to 61.8 could suggest that if, and it's a if, this holds like that, then this is a trap here. So this, depending on how we trade the next couple of days, which is going to be options expiration week and also a short trading week, if we trade down like that, then this could suggest that this was a trap. So, and why would that be a trap is because if you take a look at where we broke down here, and so we extend that line, and that break comes from this highs here. So that this here could turn out to be resistance on the daily. Right now, let's just give the market the benefit of the doubt because it's trading above the previous daily closing high there. So we'll see what happens. Let's take a look at the Nasdaq Hourly, and you can see if I draw on an hour-to-hour basis, draw a straight line there, the market is trading close to this hourly closing high here. So if it can hold above that line, that's good. If it pulls back below that line, then that could suggest that this could also be a trap here. It's hard to tell. But I have to say the fact that we're now not showing negative divergence on the hourly right there. So this line confirms that there's no negative divergence in my opinion. I know you can draw this line this way, and that's correct also, and that would suggest negative divergence. But I would like to see it really break down and look like this before we can confirm this as being negative divergence. This is very close to the line. It could easily break out. So respecting what the market has been doing lately, a breakout above this line here could actually be very strong. So until we see that pullback confirmed, then we can't say this is negative divergence. All right, because here you see that it broke out above that declining line, so which would suggest that maybe this market could conceivably, until it changes otherwise, after it moved above that line there, it has refused to come down. So who knows that the next breakout doesn't take place above this line, which could end up being negative divergence. So basically we're going to have to wait and see on that front. Take a look at the hourly on the MACDs, and you see that as long as the MACDs are trading above 0 on the hourly MACD time frame, then that is going to suggest that this market still has momentum. The only way you get this moved lower is if you break below 0, just like we had the pullback here, which was why the market was going down, is because we have the MACDs trading below 0. Anything above 0 just confirms momentum is still strong to the upside. Let's take a look at the Dow Weekly. Now, unlike the Nasdaq, you can see that Dow is ways off from breaking out here, but who says it's not going to be able to do that? It's interesting and absolutely powerful that at least for now it is holding above the 10-week moving average after it bounced off the 33-week moving average. And remember, a couple of weeks ago we drew a line like that and we said that this could turn out to be support, and it did turn into support. Coming into this week, the market had actually closed slightly around here, and I thought the possibility of a break below that line could take place, but I was wrong, because you can see right here the market still continues holding above that line. And notice that here we moved above 50 on the weekly RSI, which was this entry point here for a very strong multi-month rally. We found support at the 50 level here, which was this low. We found support here at the 50 level, which was this higher low. We had a nice rally in the market here, and so right now we are seeing the same thing, bouncing off the weekly 50 level on the RSI. So that could also suggest that over time it is very possible that this market continues moving higher now. So we have to be aware that in as much as we thought the market was breaking down here, the last 2 weeks or so, the market has now snapped back and is trading above the 10-week moving average. So really, if you want to wait for confirmation that the market could actually continue going lower, is if it moves back below that 10-week moving average. As long as it's above the 10-week moving average, let's give the market the benefit of the doubt. Let's go to the daily. And on the daily here, we see that the market did finally capture the 50-day moving average there. So it's starting to look healthy. Anything above the 50-day moving average, honestly, is healthy for the market. And you see that this is where you'd expect it to stall there, because the break point was here, which happens to be the high. So if the market finds resistance here at the beginning of the new week there, then this could suggest that eventually actually all this was a fake move, in the sense that eventually we could find resistance there, market pointing lower, and a move lower back below the 50-day moving average, and maybe we even continue pushing lower. But for now, anything above the 50 is constructive. I look at the hourly for the Nasdaq, and you see that if I take that level there, which was where they broke down, and draw a line like that on the hourly, you can see this was the break point here, and so we draw a straight line from that break point, which is here, and you can see over the last couple of trading hours we found resistance here twice. So resistance here and resistance here as of the close on Friday. So if the market turns around and registers something like this to the downside beginning of the week, then this could be a trap also. So we'll see what happens on that front. But before I go to the S&P 500, I want to take a look at the Nasdaq Monthly, which I forgot to show you. And the Nasdaq Monthly is actually very powerful. Take a look at where the RSI is trading. The RSI is trading at 79. That's just a sign of power. And also, we have a fresh weekly breakout on the Nasdaq. So as long as these things are breaking out, we really have to be aware here that this could continue pushing to the upside. So this is a very strong looking monthly chart that we have to respect. So let's take a look at the S&P 500. And the S&P 500, you can see, is very close to breaking out to new weekly closing highs. So it needs to break out above that level there. And that would be needs to be at a price of 1842.37. So it needs to hold above that if this is to be a correct breakout level. So watch that level here. Anything above 14 or 1842.37 is a breakout mode, so we need to respect that. Remember, like most of the markets, this came from support here. Once we bounced off here, we've been having a nice session to the upside, especially last week. And so we'll see that the market is back to this, testing this weekly closing highs. If it can break out, watch out. I look at the daily, and you see that on the daily, we still have to break out here for it to be a breakout mode. And we see we are trading above the 50-day moving average, which is very constructive. This is where you'd expect resistance to come in play here, because it was the previous breakpoint here, which is here. So we are back in that general area. If the market turns around from that level here like that, then that could suggest that this is a short-term high, and over time we are going to come back below the 50-day moving average. A quick look at the hourly, and you see, just like the Dow, draw a straight line from the breakpoint, which is here, beginning of 2013 there, draw a straight line. And you can see, just like the Dow, you'd expect somewhere around here, this could turn out to be double resistance on the upside, suggesting that we might have a pullback like that. So we'll see what happens. Also, I can draw a line here, something like that, which would suggest that this was the break point here before this drop here. So draw a straight line from that break point, something like that. And you see that this could also turn into resistance. The previous break point here could turn into resistance here. So we need to watch that at the beginning of the week. Now let's take a look at the VIX, and you can see the VIX really, after trying to break out here above this weekly closing high about 2 weeks ago, once we found resistance here, the possibility or the risk was that the VIX would pull back, which is exactly what has happened here. And this level had been resistance going back even to this level here. We found resistance there, could not hold above that weekly closing high, and so we had this movement lower here. We see the same thing here, all this stemming from the fact that the VIX has been having a lot of trouble breaking out above this general area on the weekly RSI. So it's not surprising that we are trading at current levels here. It's very hard for me to see this thing really snap back and make new highs. I mean, let's just be practical here. So it seems to me that it's going to have to consolidate somewhere in this general area, maybe even lower, which could suggest the market could still be healthy. Now, I'm not saying the VIX can snap back and push to the upside. It's very possible, because you're seeing this last week had a big move. As it moved below 50 here, you see that we had an 11% correction. So who knows, maybe the following week it could snap back above the 50 level and have a nice gain for the week. We'll see what happens, but this is a broken chart, just like it was a broken chart here, and it took it a couple of months here before eventually having this recent spike here. So I think the VIX is very bearish, and it's generally bullish for the market. Come to the VIX daily, and you take a look at this around this daily closing high here, draw a straight line, and you see that around that level of 20 we've been having resistance previously here, led to a drop and a nice entry point in the market somewhere around here. We had a breakout attempt here that eventually failed. Nice entry point back into the market again. And so you can also see all this is from the resistance levels here on the RSI, and I'd spoken about this was probably looking like a double top, which was bearish. And so it is hard for me to see this thing immediately snap back. It's gonna have to digest this big drop here. So that probably bodes very well for the market. Let's take a look at Apple here, AAPL, and you see that there's a possibility, who knows, it could break out above this 558, 559 level there. It needs to break out there. It hasn't done so. And if you take a look at the monthly, and I'm giving this stock the best, or at least the benefit of the doubt here. Who knows whether it's going to break out, but I'm just want you guys to watch out for, let me draw that again, for this weekly closing high here, or monthly closing high, excuse me. So the monthly closing high, anything above that monthly closing high, which would be at a price of 557.68. If it can hold above this monthly closing high, then that would be a nice entry point during that breakout. If it doesn't break out above 557.68, I would just ignore this one for now. Otherwise, that's all I have on the free part of this video. The next and the preceding is going to be analysis on sectors and stocks for subscribers. Have a great week.